Hello everyone, welcome to another episode of In Conversation by Advisorkhoj. Today in conversation, our guest is Mr. Sorbh Gupta, Head of Equity with Bajaj Finserv Mutual Fund. Welcome Sorbh to In Conversation with Advisorkhoj.
Thank you. Thank you for inviting me.
Always a pleasure. So Sorbh, before we dive deep into the product which you're launching, the NFO which you're launching, it'd be great if you could just let our viewers know about your investment management journey, experience, and what are some of the other schemes which you are managing at Bajaj Finserv Mutual Fund.
Sure. So, post my qualification as a CA and my CFA, I have close to now 18 years of experience in the industry. Initial few years I spent with a family office, and I got a very strong learning because the entrepreneur who had set up this family office has a history of setting up a lot of businesses.
Oh,
So,
wonderful.
so thankfully I got the very important learning that look at business first and then valuations. That was a very important learning how to understand businesses. Then I moved to a mutual fund and a FPI advisor, Quantum, and there I've spent close to 13 years. And my initial experience of very process orientation, being process orientation and servicing to some of the biggest foreign investors in India as institutional investors, pension for global pension funds, gave me a lot of learning on how processes are important, and that brings in the consistency of what you are trying to deliver in terms of alpha. And then close to 2.5 years as a founding member of the investment team at Bajaj Finserv. I joined in November 22. Right now, being heading the department, I've been into all the equity funds that we are having right now. I'm participating in decision making of all of them, and also the hybrid schemes that the organization have right now.
Excellent. So always been on the buy side, technically speaking. So
Yes.
wonderful. So I'm sure in the past 18 years, you must have really seen the buy side as well as the sell side demographic completely changing.
Absolutely. So things have changed a lot. Yes.
Absolutely. So Bajaj Finserv Mutual Fund, they are launching your new fund offer of Bajaj Finserv Small Cap Fund on the 27th of June and closing on the 11th of July. So a couple of questions around this, that why a small cap fund now, correct? And could you also, let our viewers know in terms of what will be your style of management? And I believe there is also a three-in-one strategy, which you'll be playing through this fund. If you could just take our viewers more through that, please.
Yes. So in terms of why now a small cap fund has two answers. One is the near term answer, one is the long term answer. The near term answer over here is that when we look at the small caps, they appear to be fairly valued as a category.
Okay.
Now, when we talk about at index level, it's fairly valued. It also hides a lot of facts. Now, if I talk about, say, our equity universe of small caps, which is close to 900 companies, extended universe, of any company which is more than 2,000 crore market cap, there are 900 small caps. As of 31st May, of that 900, 25%, 600 of those companies were down more than 25% from their 52-week high. Right. So that while people are nervous that the levels are higher on the small caps, there is a long tail which has not performed in the index, in the category.
Sure.
Add to that, if you look at the small cap 250 Nifty as an index, and we look at the if I can call the bull market, which started with SVB crisis or Silicon Valley Bank crisis, and from there on the index has doubled. There are totally 52 industries represented in that index, and I'm talking about industries, not sectors, of which 17 have outperformed the index, but there is a long tail of 35 industries which have underperformed and delivered lower than index returns.
Sure.
So clearly, it's a very heterogeneous mix. Definitely, it is not 2019 where every small cap was cheap, and definitely it is not 2017 when every small cap was expensive. It's a fairly level of the markets and heterogeneous market. It's a great stock pickers market. That is the near-term reason why I believe this is a good time to look at small caps and curate a decent active portfolio. From a longer-term perspective, the answer is a lot more richer. It says that a lot of things in the economy, Indian economy, is happening, which is not represented by large caps or larger companies, but more by small caps.
I totally agree.
Especially what is happening is that in the last 3, 4, 5 years, a lot of new industries and sectors are emerging because of a lot of changes done by either the government or technology or a lot of things where the representation of large caps are not there. And that is logical because the industry itself is new. you won't have large companies representing that.
Sure.
Some of these are defense, a great opportunity, while we have to be very choosy because valuations have gone through the roof in some cases, so we have to be careful. Similarly, if you look at opportunities like power equipment, which where government is not spend so much money as they plan to spend over the next 5-7 years because a lot of it needs to be changed. Online marketplaces are the new businesses that are coming in very fast. So that opportunity was never there 7 years ago or 8 years ago. So all these opportunities are emerging very, very fast.
Sure.
Also, electric vehicles, where it was not an opportunity, and any company which represents electric vehicle ecosystem will always be small right now.
Yes.
Or if the large company is doing that business, it will be very small portion of the revenue, and you don't get the benefit of the fast growth that the industry can offer. So all these things tells you that some unique opportunities are emerging in small caps which are not represented by large caps. So maybe from a longer term time frame, you should have some exposure towards small caps, and that's the reason. One of the thoughts that we thought we'll launch the small cap fund now.
Sure. So what about this quality growth value 3-in-1 advantage? If you could also, throw some more insights into that. And also, what will be the style of the management of this small cap? And how many stocks? Are you looking at a long tail in this portfolio, or are you looking at more like a 55 to 65 stocks in this fund?
Sure. So let me walk you through the reverse funnel, or the funnel, how it works. So as I
Sure.
told you, any company which is more than 2,000 crore market cap is our broad universe, which has close to 900 small caps.
900 small caps.
So from there, we filter out. So in small caps, the most important part is eliminating rather than selecting. So we will eliminate on the first level. The first level of quality comes as forensic research, where we'll eliminate bad managements, bad companies, or companies with bad track record on related party transactions, companies which have litigation issues. All those things get filtered out from that 900 name. And then comes to the pure quality, growth, and value triangle that we were talking about, in terms of the quality of the business, growth that it offers, and the industry growth, and at what valuations it is available. From there also, the most sacrosanct of the three is the quality aspect, because history tells us and our own experience tells us that being a deep value investor without being conscious about quality in small caps is not a great idea, because small caps being smaller companies, the mortality rate can be higher in this segment. So quality is sacrosanct. Once we have tested for quality in terms of forensics and governance, you come to the quality of business, company's ability to gain market share, company's ability to maintain profitability and grow, and return ratios and capital efficiency, all those aspects. And once you get that, then you choose between value and growth, in the sense that where is the risk reward, and then you create a portfolio of 40 to 100 stocks. So that's how we are looking at things. So you can say, so in summary, that we are not trying to bind ourselves as quality, value, or growth. It's a combination of all three. Whatever opportunity in terms of it works, well, quality will be sacrosanct. But beyond that, quality, value, and growth, wherever we find opportunities, we look at and invest.
Sure, sure. And how many stocks you plan to hold in this portfolio?
As I told you, it would be anywhere between 40 to 100 stocks.
40 to 100 stocks, sure.
Plan to be quite well diversified.
Excellent, excellent. Tell me something, like you did mention, of course, that you believe that the valuations for small is reasonable at this point of time. So obviously you should believe that for mid and small as well. And if you could just highlight some of the few aspects, which will lead the growth in this broader market. Like we did discuss about defense, of course, but defense is definitely become very pricey at this point of time. But you could just tell highlight some of the more factors which could be leading to the broader market's growth.
Definitely. So let's look at how the policy has changed over last 6-7 months in India. If I go back to last year, what was happening around the same time or few months ago, for example, in May, June, you had a fiscal policy which was capex focused and a bit tight. So every year, I think in terms of fiscal tightness, we are leading the world in terms of controlling the fiscal deficit. So our fiscal policies have been very, very tight and focused more on capital creation, rather than social spending and stuff, especially if I talk about the union budget.
Sure.
And secondly, if you see, while the rates were not increased by the RBI, but definitely there were a lot of regulatory things that the RBI put last year in terms of deposit ratio that you need to maintain and what kind of lending that you want to do, and you want to control the unsecured lending. All of this resulted in a bit more tightness, and you saw the growth slowing down in India, both in terms of GDP growth and corporate earnings. Come Jan onwards, what we have seen is that one, the monetary policy is a lot easier now. And that's very, very obvious. In fact, much easier than we initially expected, both in terms of liquidity and rates.
Yeah, very much front loaded.
Yeah, very front loaded and high on liquidity. And even if you look at fiscal policy, first time in as many years, in 5-6 years, what we have seen is that the tilt is towards pushing consumption by the government, by tax cuts. So all these things tells you that the domestic GDP growth should pick up from here on. And in a cyclical uptick in growth, it is the broader markets, the smaller companies, which tend to do better than larger companies, because they are a little weaker section of the society which needs some tailwind and push to grow faster. And when that tailwind comes, they can often surprise on the upside in terms of growth. Just give you an example. Most likely a good large cap company would have a higher credit rating, and a small cap would have a lower credit rating. In a rate cut cycle, it's the lower credit rating person who gets more benefit than a AAA guy. Right? So the delta of change for broader market is more in an up when the economy is seeing an uptick rather than the larger company. So these are some of the things that makes the broader market a little more sweetly positioned compared to larger companies right now.
Sure. So why should investors and distributors currently, look at, investing into the Bajaj Finserv small cap NFO?
Sure. So there are multiple reasons why one should look at. One is definitely the forensics that we are telling out. So our idea is to minimize mistakes first and then look for opportunities. That is something that safety first kind of thing that we are looking at. So we have a dedicated forensic team to take care of that. That is one aspect. Second is quality becomes sacrosanct again. So that is something that we are looking at very, very strongly. So that is the second filter that we are running. Third is the liquidity part. Now, when you look at the 10th largest small cap fund in this country, it is around 10,000 crores or maybe more. Right? As I told you, our universe is anything above 2,000 crores. So in the 10th largest fund, if that fund wants to take a 1% exposure in a company which has 2,000 crore market cap, they have to buy it worth 200 crores. That means they have to buy 10% of that company.
That's right.
And we all know what's the liquidity profile of some of the small caps, right? So at least for some time, the size also gave us some nimbleness in terms of funds. And one more peculiarity about small caps that all of us would agree to is that in every new uptick in the small cap category or cyclically uptick in terms of earnings and stock prices, the leadership changes. So for a new fund, because we have cash and we are seeing new trends emerging and focus on domestic economy, so we can create a new portfolio for the next upcycle in terms of earnings growth for small caps.
Sure.
If you look at history, the leaders of 2016 to 2018 rally of small caps are not the leaders from 2021 to 25.
Completely changed.
So when you are a large fund and in an environment you're working where liquidity is tough, to change the portfolio, it becomes a bit of a challenge. And here the new fund has a certain advantage.
Sure. Tell me something. When we look at the small cap funds, generally, obviously, they are receiving heavy amount of inflows through SIPs and multiple other routes, but they are considered to be a riskier form of investment, correct? So what message would you like to give to, advisors, mutual fund distributors and investors? Of course, keeping in mind the Bajaj Finserv Small Cap Fund NFO, but also keeping the broader investment into small cap funds, that how should they mitigate this risk or minimize this risk in investing in small cap funds? Or are actually small cap funds really risky? What message would you like to give? Because, there is always a debate on that, correct? That in your portfolio, when you're aligning, don't have so much small cap, don't do this. But I completely agree with you, and this is my personal thought as well, that unless and until you don't invest in small and mid cap funds, you're not really participating in the broader market themes here. And if India for the next 2 decadal is a growth story, right, then you have to participate in it. How would you address that?
Correct, absolutely, and it's a fantastic question. Uh, First of all, the tilt on quality reduces the volatility.
Sure.
So you will see that if you tilt towards quality, you tend to be a little more volatile in terms of portfolio, because quality companies are a little less volatile with the market movement because the quality. So that is one thing that you can do to have a little less volatility in your small cap exposure. So tilt towards quality means a low vol strategy. That is one thing, and that we also plan to practice in our
Sure.
fund. Second thing on small caps is, how do you define risk? The best way to mitigate risk in small cap as a category is to have a longer term approach,
Hmm.
because volatility is a risk for a trader, not an investor.
Hmm.
For an investor, volatility maybe is an opportunity to buy at right times,
Right. Absolutely correct.
especially the noise that are around us, which can give a lot of volatility, maybe Iran war or maybe tariffs and other things. These are opportunity for investors to look at a category and invest rather than being fearful about that. So having a
Absolutely.
long-term horizon
Hmm.
definitely helps in managing volatility better.
Hmm.
For a long-term investor, risks are twofold. One is getting into the wrong product or a wrong stock where
Hmm.
there is a capital loss. So tilt towards a better quality helps, and avoiding hypes also help.
Hmm.
So what is very in vogue today might be a little more hype and more overvalued. Instead of that, focus on the fundamentals and what could do well over the next 3 5 years. That is more important than what is doing well right now.
Sure. Sure.
So approach should be that, and looking at the portfolio liquidity, because when you require your money, often times what happens if you are running a very liquid portfolio, the NAVs that you generate are not the real NAVs, because
Hmm.
that is not realizable because of liquidity issues. Thankfully, the
Hmm.
funds are retail, so most of the funds can manage small redemptions. But in small cap, that is a very big risk. So one is liquidity. That is an actual risk for an investor, ability to realize the same NAVs that you have been seeing whenever you require money. And secondly, not getting into capital loss situation by minimizing mistakes. So if you take
Sure.
care of that and having a long-term approach, volatility should not fear you.
Absolutely. Absolutely. No, I totally agree, because volatility, I believe that equities are volatile, and volatility is an opportunity to make higher returns, not to run away from it. So sometimes we say that the cost of not being in equity is higher than the cost of, being in equity, etc. So one has to continue staying invested, specifically when it comes to broader markets. Just one question which comes off, to my mind is that how would you be looking at the liquidity, particularly for this portfolio? Because small cap, of course, we have the liquidity stress test, which has been every fortnight, which the funds have to come for mid and small caps. So what how much importance will you assign to, let's say, quality हो गया, growth हो गया, value हो गया, liquidity को आप कितना weightage assign करेंगे while you're creating this portfolio?
Liquidity will also be very, very important, especially on the portion of the portfolio which we believe uh, can be used to service if there is any redemption. So
Sure.
definitely you will not make the whole portfolio very, very liquid, then it compromises on returns also.
Absolutely.
But the reasonable part of the portfolio should be such that you can sell it and redeem it. So
Hmm.
what we do is that for every company that we buy, we will have that if there is a certain market participation by us, maybe 25% or 30%, how many days will it require to buy or sell? So get in and get out without much impact cost.
Sure. Hmm.
So we'll ensure that a sizable portion of our portfolio is something that if I put together that, I should unwind the position, exit the position with much less impacted cost within certain stipulated days.
Sure.
So that will tell us that will help us that if there are reasons where you want to sell or there is a redemption pressure or market down cycle, that should protect you to a certain extent, that you provide liquidity to the investors without destroying the NAV too much.
Sure. 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 Great. Wonderful. Wonderful. So, well, for our viewers, this is Mr. Sorbh Gupta, Head of Equity with Bajaj Finserv Mutual Fund, talking about their new fund offer, Bajaj Finserv Small Cap Fund, being launched on 27th June and closing on 11th of July 2025. Thank you very much, Saurabh, for taking time out and coming for this in conversation, and having a deep dive not only about your fund NFO which is coming, but also about its style of management, and the various the attributes which surround this entire system broader markets and what investors should do in markets and times like this. So thank you very much for talking about the small cap fund. And we wish you the very, very best for this. Thanks, Sorbh. Thank you very much.